State-owned logistics group Transnet has announced an ambitious 7-year, 300 billion rand capital expansion program, with the lion's share, 200 billion rand, allocated to Transnet Freight Rail. And 85 billion will go towards port infrastructure, 15 billion to completing pipeline projects. And we asked Brian Molefe, CEO of Transnet, how 300 billion rand will help position South Africa as a key commodities supplier.
Look, the intention is to support our already primary industry, mining companies and so on, to be able to become a significant supplier of thermal coal in the world. Germany has already announced that they are not going to do nuclear, they want more coal. So that is an opportunity for us to export coal to Germany. China is already a huge consumer of coal. By the end of the 7 years, we expect to be the 4th largest supplier of iron ore to China. But more importantly, we hope that in the process, we will develop our own beneficiation of the minerals that we are producing and be able to transport them in the domestic economy efficiently to reduce the cost of business.
When we're talking about the maritime side of the business, you're looking to increase the number of containers handled by 76%. That's from 4.34 million containers to 7.64 million by the end of the 7-year period. Give us an idea as to what extent this is going to be as a result of building new ports, increasing capacity, and to what extent that is going to come down to increased productivity at the ports.
A big chunk of it will be as a result of increased productivity. As we've said before, the big problem that we have in our port system is really in Durban. And over the next 10 to 15 years, we're looking at the development of the Durban International Airport site to become a port, a dig-out port. In between now and then, we're looking at improving productivity and deploying bigger and better equipment at Durban Container Terminal. So the Port of Ngqura, for example, is going to be able to have capacity to handle up to 2 million transshipments, which can be increased if we increase the equipment at the Port of Ngqura. Port of Cape Town is operating relatively well. We expect there to be business as usual and growing business as usual.
When you're talking about Durban, you've just concluded the purchase of the Durban International Airport land from AXA, paying 1.2 billion rand of the 1.8 billion rand, which is the overall price tag. Just give us an idea of the plans for this land, how that fits into the overall plans. What is it going to be used for exactly? What's the timeline for them starting to build there?
The plans are to develop a significant port with terminals at the current site of the DIA. So this involves digging out the earth from the current Durban International Airport and allowing the water to come in and developing a port, buying equipment for the port and operating it as a port to complement the existing Durban the container terminal. Now, the cost of the development of the DIA, Durban International Airport site, into a seaport is not in the 300 billion. So we expect the private sector, that we will mobilize a private sector investment into that development, which can be anything north of 30 billion rand on a basis of a build, operate and transfer.
Let's talk about the role of the private sector and the one that you envision in this plan at the moment. To what extent do you hope that the private sector comes and plays its part in building South Africa's infrastructure? Is it going to be a case of buying the bonds that you issue, or is it going to be a case of creating public sector partnerships with key private sector players?
It's a bit of both. I mean, where appropriate, we will have public sector partnerships with key players, but we also know that the private sector is averse to risk. And so what we intend doing is that in our 300 billion expenditure program, 100 billion needs to be borrowed, and that will be borrowed from the market. And so to the extent that it will be borrowed from the market, there will be a need for the private sector to invest capital in Transnet bonds and in different financing arrangements to finance the infrastructure. And so there will be, in a way, there will be private sector participation participation in the debt capital markets, as well as equity participation in the PSPs that we will identify.
Have you identified any of those PSPs? Where
We have identified the branch lines that need to be concessioned. The biggest PSP of them all is going to be the Durban International Airport. And the Richards Bay Coal Terminal is in fact a PSP because it is a terminal that has been concessioned out to the private sector.
In terms of funding, you say that 2015, 2016 is really the crunch year for any executive at Transnet. If you manage to get through that year where you have to raise 20.5 billion rand from the market, that's the biggest chunk in terms of borrowings, you basically have got to the top of the hill. Do you foresee this as being a problematic year? I mean, how are you preparing the balance sheet in order to ensure that you do have the type of company that investors, whether they be banks or IDCs, want to invest in?
Yes, in that year we will deploy 46 billion as capex, and we will have a borrowing requirement of 20.5 billion. According to our plans, we should be able to absorb it, but it's quite daunting. Those are big numbers, and so what we will try to do is try and as we ramp up to that year, try to improve our performance so that the borrowing requirement is a little less than 20 billion in that year.
From a cultural perspective, there have been some who said that it's been a period of transformation for Transnet. It has been tough to get that new transformation through the company. Are you feeling you're making progress on that front? Yes. And how is that starting to impact productivity?
In the last year, we've improved the volume performance by about 7.5%. You will see when we announce our results that our audited financial numbers will be quite impressive as a result of volume growth in the last year. Our efficiencies are up by 17% on rail. And so we have used the last year really as a testing period to see how far we can push the organization. And it looks like the organization is quite ready to be pushed into the direction that we're taking the company at the moment. So we're quite comfortable that the hearts of our people are in the right place and that we can execute an audacious scheme such as this one.
This is a very important scheme also for Africa and fueling interregional trade. Tell us about the key linkages that you're hoping will help to spur South Africa's role as a hub into Africa and spur interregional trade, which is so key to the continent's growth.
Look, firstly, we have already started with the Swazi Rail Link, which is a regional railway link. There will be others. The President has been given the task of managing the North-South corridor, which is a rail corridor between South Africa and Tanzania up to Dar es Salaam. So we are beginning to get involved in discussions on that. Our vision is that the port system on the continent should operate as a system and not as competitive entities or competing entities. And so we are going to be starting discussions with our counterparts and the port managers in the other ports on the continent to see how we can collaborate to increase the benefit to the continent of international trade.